Let's now welcome on board Sandeep Tandon and find out what he's expecting from the markets and the budget this time. Sandeep, hi, good morning.
Very good
Well,
morning.
we've already months to date scaled up about 4% on the index alone, and I'm not even talking about individual stocks or the small and the mid caps. What's the anticipation from the budget? What would the budget have to do for the market to keep the gains intact?
So if you look at just the behavior aspect, if you look at the current government continue with the same ministry, and the ND or allocation was something similar, which is a clear message that government wants to showcase that continuity remain as it is the way it was there in the tenure one, tenure two, and not tenure three. With that background, if I have to read, then I will only conclude that the continuity will be there, which means reform continuity will continue, and all sort of agenda which government was running in terms of capex will also continue. But only big change which we expect, since government has luxury of some surplus right now, and I think given the rural economy which has suffered post COVID, and I think there will be a special emphasis on increasing the disposable income of the middle class family. Okay, so I think that is a big change which can happen. I think most of people are expecting, and I think I do expect something on similar line. Government will put in efforts to increase the consumption level should move up. Okay, so instead of talking about just capex, and capex, I think somewhere you will hear this time about the consumption aspect, and I think that should be the genuine concern that government should address. And we are also very optimistic that overall the fiscal prudence or discipline will be maintained. Continuity on the capex will also be there. Maybe less emphasis this time as compared to whatever we have seen in the past. Maybe consumption comes back, and whether you're talking about PSU related things or the defense related or railway related, I think that thing maybe a lot of emphasis will be there on the agri side of the budget. So because rural economy is affected, I think a lot of emphasis will indirectly will coming on the agri side. So these are the areas, and SMEs which have suffered a lot. So I think that's another area which we believe on the SME sides will be there. Housing will continue, the masses level or the lower housing thing. That should be the theme. So if you look at the background, I'm not expecting anything dramatic change or radical changes happening in the budget. Maybe minor tweaking will really actually help the sentiments.
You launched a consumption fund just a while back,
Yeah.
perhaps a little ahead of the estimates. Previous quarters, when some of the consumption companies started talking about green shoots, which categories of consumptions are you most believe, where the rebound could be faster if indeed government goes about and does a helping hand to the reeling population at the bottom of the pyramid?
So if you really look at Ajay in last few years, actually people have cut down their budget because of the inflation and supply constrained inflation. I will not say it was a demand driven inflation. It was supply constrained inflation, which has really hurt the masses. So I think instead of talking about consumption in general, I think is good. But I think particularly the staple FMCG companies, okay, where rural demand is clearly linked, I think those are the companies we will be more interested in looking at, and they have been trading now in the neglected territory. And they peaked out in September 2020 post COVID. Since then, we have seen they have reached a neglected phase where people have given up hopes in these names. So I think these are the names which we are optimistic. And as you said, we are student of predictive analytics. We were relatively early in spotting this inflection point. So in the month of January itself, we spotted this early trend, and we talked about that high frequency data is showing early signs of revival. So we are very constructive on this space. That's one of the reasons you will see our portfolio, the weightage toward the FMCG names has increased significantly as compared to last few months.
But Sandeep, is that a long-term bet or more of a tactical approach right now that you have on FMCG?
I think I will not say at least a few years perspective, okay? Because a long-term definition is very different for others. When for us, long-term will be around 3 to 5 year horizon. So if I have to look at from a 3 years perspective, I think this is the area where we would like to invest money.
Sandeep, you also briefly mentioned SME part of the economy. Now, the point is that on the representation in the markets, how would you go about? Would you go with some of the SME lenders or value retailers, or how would you actually approach that lower end of the K, which is actually where the SMEs actually service most?
SME lender will be a better space because overall NBFC and overall financial space has They've also rallied it off late, but they're not that expensive as compared to real retailer if you're talking about, or some of the durable names. They have become relatively more expensive. So I think I will go with this more from the BFSI space, whatever opportunity. But one has to keep in mind in the market in general, nothing is very cheap. So that aspect you have to keep in mind. But I always say it's not about absolute. It's always about relative. Okay. So we have to look at both absolute perspective also and relative perspective. When you look at the combination, you will do get some answers.
Sandeep, as large as the PSU basket may be, but do you also think that it's getting too heavy on the top right now and may perhaps fall under its own weight if indeed the order flows aren't as strong for many of these pockets? How should one approach PSUs now in the very near term?
So if you look at the larger thesis, extremely bullish, answer is yes. But I agree in from a very medium term perspective, they also have rallied a lot. Okay. And if there is any disappointment, okay, there might be a correction. I have always seen, any event happen, market tends to correct first and then it correct, consolidate and moves up because people, when they realize what exactly the potential is a mindset. Any company comes out result, even it is good, you have seen a profit booking. So that sort of phenomena I'm not ruling out, but we have to keep in mind the general interest of the economy, okay, where government focus still remains on certain areas. Maybe defense are relatively more expensive, railways are slightly better. And I think this time focus should be there on the some of the government company. I like particularly the insurance space. That's the one area which I personally expect, it has been a neglected and beaten down territory for last 4 years. So if you look at the BFSI space, the bank has marginally recovered. So insurance is one area which I look at both private sector and public sector. So maybe public sector opportunities could be more meaningful. Even private sector looks good to me. So I think it's a strength how well you can do sector rotation and stock rotation. And that's the way this market is all about now.
You're playing, this entire energy transition theme in your portfolios. I saw some names, some big conglomerate-backed names, but these are mega themes. Do you have, perhaps renewable financiers, OEM guys, wind turbine companies, or how exactly, how bullish are you on this energy transition theme?
Yeah, frankly speaking, it is very, very bullish. But only thing we have to look at this green energy as a theme will really play out by between 2027-28 till around 30-32. So if somebody has that 5 years patience, then only one should invest in this space. And it has to be a strategic holding position. Don't look at from a trading perspective or a near term or medium term perspective. These are really long term calls, and I will call a decadal call sort of thing. If you have that sort of horizon, then only invest because all these names are also relatively expensive when I look at from the current year or next year earning perspective. But if you have that 5 year perspective earning, then they are very attractive. And given the scale with this opportunity, it's not about the just the valuation. The scale will be very meaningful. So as a green energy, as a concept, whether I talk about hydrogen, solar, renewable, any form of green energy is the focus area. But one has to be choosy in terms of valuation, and one has to be very clear. These are very long-term theses. Don't play from a short-term and near-term perspective. Otherwise, you will be disappointed.
Sandeep, just one last question before we
Yeah.
let you go. And the chatter and the clamor on curbing F&O trading, especially from the retail side, has only gotten louder now in the corridors of New Delhi. I mean, it may very well be outside the ambit and the purview of the budget today. But just wanted to ask, what is the best way to actually implement those curbs, you think?
See, the most important aspect you have to look at the totality picture. Since I was very early in the derivative space, so the inception I've been seeing it very closely. See, what is the first thing you have to remove these daily settlement which is happening? This is actually encouraging the speculation. We used to have monthly settlement that was very good, and even you should expand the indices in monthly settlement. The moment exchange get into from a business point of view, weekly settlement, and now every like if you look at every week one expiry is there. I think that is the one area which regulator has to look at very closely. Exchanges should not be work as a profit center. They should be just facilitator of the trades. So when the moment that perspective changes, you have many more answers So I think one has to look at it in the totality that this sort of speculative activities, from a regulatory perspective, also has to be pruned down. I agree it will hurt in the long term because a lot of masses money is getting shifted to the option side. So I think some control is required. Maybe increasing the lot size could be a good suggestion. Linking with the balance sheet of an individual should be a good suggestion. But just to say that it should be completely controlled will impact the market in a big way, because we have to keep in mind the impact cost. Okay, right from if you go back in the history of 2000 onwards, the impact cost of the Indian capital market has come down and Indian stocks has come down significantly because of the derivative volumes has picked up. In fact, on the option side or the future and option side, the impact cost is one of the lowest in the world. So one has to look at not only the negative aspect, also what it contributes. A lot of people say arbitrager make free money. No, but they provide liquidity. Globally, people give incentive who provides liquidity. You have to keep in mind the liquidity is equally important, because this extraordinary volumes which take place really help a lot of institution player also, because their impact cost on lower side. So one has to look at this thing in totality rather than just saying just curb it.
Sandeep, always good chatting with you. And once those curbs get implemented, I'm sure we'll chat again soon. Good to have you on the show.
Thanks a lot for calling us.
If you like this video, then like, share and subscribe to ET Now.